What is going on with MemeCore? The M token is appreciating much faster than the rest of the market. The question is why? Who's buying here? Who's selling here? What's behind all of this? Let's have a look at the on-chain data, the data most people are not considering. The chart this month looks pretty much like a hockey stick, but we did see a pump and dump before. So is this just price manipulation or is there something going on? This is not the first video on MemeCore on this channel. I've published 2 videos before. Both of those videos underperformed the average video on this channel. So actually there's not too much attention on MemeCore. MemeCore is not just a single token. It's actually an entirely different blockchain with individual smart contracts, etc. We can have a look at the usage data in this video as well. So you might know Etherscan, you might know BSC scan, but there's also MemeCore scan. It looks very similar to any other EVM compatible chain, and there's multiple transactions processed every single minute. Here's the number of unique addresses over time. Here's the number of daily transactions over time. And here's the number of smart contracts. Now, none of those statistics look very organic, as in we do see jumps in the usage. There seems to be a lot of experimentation with the blockchain, but not really organic growth long term. The chain is still so small that it's not even listed on DeFi Llama. And DeFi Llama has hundreds of blockchains. But unfortunately, MemeCore is not part of the tracked chains. It's also not part of the DEX screener overview. So we've got various blockchains, many of them with just a little activity. For example, here, Ape Chain, only 187K worth of trading volume in the last 24 hours. Or have a look at this, Asta, only 30K of trading volume. So there are really small blockchains here as well, very inactive blockchains. MemeCore still is not listed on DEX screener. But something must be the cause of this recent rally. It's not the usage of the blockchain. There is a ported version of MemeCore, of the M token on the Binance Smart Chain. We can have a look at the holder statistics over there. So here's BSC scan. There are 3,500 holders roughly on the chain. On the left side, we see the number of wallets with at least 1,000 MemeCore tokens. MemeCore is close to $1, so it's roughly $1,000 worth of the token. In the middle, it's 10,000 tokens. On the right, it's 100,000 tokens. We do not see accumulation across any of those wallet cohorts. So again, this does not explain why the price goes up and down that violently. All these numbers are quite interesting because the market cap of MemeCore is actually quite large. It's got 1.4 billion market cap. It's more expensive than the Pump.fun token, and it's very close to the Bonk token and official Trump token. Here's MemeCore relative to BNB. So the M token is listed on the Binance Smart Chain. It does make sense to look at relative valuations. And yes, the M token did outperform, but we are now at the upper end of a trading range. There might be potential of maybe 15% outperformance, but there's also the risk of a drop of 50% from here. What I believe is causing this price volatility is not purchases on the blockchain, it's not purchases on the Binance Smart Chain, it is actually trading of perpetual futures, of levered bets on the price. Because have a look at this. This is a trading volume on the spot market in the last 24 hours. And this was led by BitGet with roughly 20 million worth of M token trading volume. But compare this to the perpetual futures market. Here we had 72 million worth of trading volume. It's still not much relative to the market cap, but it's more than what we observe on the spot market. And so the perpetual futures market is really where the price discovery happens. And it seems like the vast majority of traders on the perpetual futures market are very skeptical of this price development. As in, most people are betting on falling prices. The funding rate is negative. The shorts have to pay the longs in order to get exposure negatively to the price. In other words, when the price is going down, profit is made by the shorts. They're willing to pay a lot of money, or rather a lot of funding rate to bet on those falling prices. And so here's what's causing all of those rallies. It's short liquidations by people that bet on falling prices. If enough people bet on falling prices of an illiquid token, then it might be worth it to just buy up the token on the spot market and force liquidate all of those shorts. That's how many market makers and centralized exchanges are making their money. Just have a look at all of those short liquidations that always happen during massive price rallies. And that then leads to the open interest falling again, because the people that rightfully so bet on falling prices, they can't stay liquid for as long as the market stays irrational. And so there seems to be some kind of a limit to when the market makers find it profitable to push up the M price again. Currently, we are at 70 million worth of open interest, and at 111 million in the past, we saw the peak of the short squeeze. So MemeCore is not going up because the platform is used as much. It's not going up because people acquire this on the blockchain and accumulate more and more. It's going up because market makers artificially manipulate the price to the upside because there's so little liquidity and because it's just useful to force out all of those people that bet on falling prices. It's a clear player versus player game. And as long as there's enough people that bet on falling prices, and as long as the open interest is high and the funding rates are negative, MemeCore will continue to get pump and dump. And that's the only reason why we see this outperformance. Now, I personally do not bet on any direction of MemeCore, simply because this is a very dangerous fire to play with. Yes, the market cap is way higher than it should be. Yes, MemeCore is overvalued, and in theory, it does make sense to bet on falling prices. But I don't want to actively fight with the people that have so much experience manipulating the market. I think it's better to bet on falling prices of altcoins that continuously go down, where we already have negative momentum and where it's much harder because there's more liquidity to manipulate the price. Now, fundamentally, there are two ways to make money with investing. The first way is to just bet on long-term adoption and to bet on monetary debasement. So that's the idea of dollar cost averaging, right? We buy into Bitcoin all the time. We just bet on the long-term growth chart. For example, had you bought $1,000 worth of Bitcoin every month for the last 5 years, so you held Bitcoin for more than a single cycle, then you'd now have $213,000 worth of BTC, and you outperformed the S&P 500 and the gold market by more than 2x. The reason why such an approach works is because more and more capital long-term flows into the asset. So more people buy the asset without the intention of selling it. More and more people just buy the asset in order to preserve purchasing power. This works with Bitcoin. It also works with the property market. It also works with the stock market. People don't necessarily buy those assets in order to flip them quickly. So have a look at the number of wallets that own at least one Bitcoin. This tended to go up long term. This growth has stopped to a degree 2 years ago, but now we've got Wall Street that instead buys the Bitcoin. So there's still long-term adoption and thus Bitcoin price appreciation. The treasury companies, they never sell, and the ETFs also rarely sell. There's only very few instances where we see net selling. We really have to zoom in to see those kind of events. So that's approach number one, right? We bet on adoption, we bet on further capital accumulation, but then there's also approach number two, and that's trying to beat the market, right? It's trying to buy low and sell high, and effectively what we're doing there is we're taking money away from the person that's not able to time the market as well in order to get outperformance. So if you want to get more performance than the average investor, we effectively taking it away from the investor that doesn't really know what they're doing. So let's say we are using tools like the realized price, right? The average cost basis of the market, and we buy much more Bitcoin whenever the current price is below that realized price. Then of course we are buying when everybody is very skeptical about crypto and Bitcoin. We are in a way doing a contrarian bet. Nobody wants to buy Bitcoin, so we do. The same is true when Bitcoin is high, right? For example, here, the CBBI indicator, we want to sell when this is rather high, when everybody is hyped about Bitcoin, when everybody thinks that Bitcoin will go to the moon, and the rally accelerates. That's when we want to potentially exit. We are not yet at those extremely high levels. But again, we always want to do the opposite of what most other people are doing. Because that's the way to make money in crypto, right? The minority is able to beat the masses. The masses tend to do the wrong things. Only the people that do the opposite of what most other people do, they accumulate above average returns. If you do a 2x on top of just buying and holding Bitcoin, then you basically took all the money away from somebody else, or you took 50% away from 2 other people. You get the gist. And so that's why I like the crypto market. And that's why I don't speculate, for example, on the currency market, because the currency market is extremely efficient. It's got all kinds of quants and hedge funds working for it. It's a very large market. It's incredibly hard to beat. When we are taking money away from the people that aren't as smart in the market, we're basically seeing all the other market participants as competitors. And we want to have very weak competition, not strong competition. We don't want to have the Einstein hedge funds as our competition. That's why the currency markets are very poor for active speculation for the average person. And the same could be said potentially for the stock market, right? The stock market also tends to be somewhat efficient. Before my time in crypto, many years ago, I was actually a professional poker player. I paid my study fees, my private tuition with the earnings from poker. I lived from poker several years. I used to live in Gibraltar at the time. With poker, I learned that it's not just the skills that matter. It's not just about calculating probabilities and reading tells, etc. It's also about who you're sitting with at the table. If the table is only made out of sharks, it's only made out of other professional players, then there's no money to be made. But if you're sitting at a table where all the other players are just beginners, then you don't need that much skill in order to beat the game, in order to make money. And it's the same concept here for speculation. If we want to outperform the average investor, we better participate in assets and in markets where we're mainly sitting at the table with fish, not with shark, right? We want to be in a soft market, in an inefficient market. And so here is where I see the inefficiency in crypto. Crypto as a whole is already comparatively inefficient, at least in relation to the currency markets or to the stock market. But really the main inefficiency comes from token dilution. For example, have a look at this. The Ape token has a lot of token dilution. Here is the number of Ape tokens over time. 3 years ago, this was at 284 million. Now it's at 908 million. There's all of those new tokens that get issued all the time that goes to the insiders and to the team and to early investors, etc. They get new tokens and they dump those tokens on the market. And this is not a new concept I'm talking about just recently. I even talked about this specifically for the Ape token just a few months ago. Have a look at this video. How solid is the Memecoin rally? This was published 9 months ago on the 22nd of October. At the time, the price was at $1.57. And here we are today at 63 cents. We had a massive rally in the Ape price at the time, but relative to Bitcoin, Ape went down massively afterwards because the rally was triggered by some news event, right? People got very excited about Ape and then the insiders dumped very quickly. It's something that's not really surprising. This is an underperformance of 78%, and this is one sign of market inefficiency, right? If everybody is buying into a rally, despite the terrible tokenomics, that's an opportunity to make money. We're not buying Ape, we do the exact opposite. We are selling Ape that we don't have. We are shorting the Ape token. In other words, we make money whenever the price loses versus Bitcoin, Ethereum, Solana, the major cryptocurrencies that tend to appreciate over time. Now, Apecoin is just one example. The whole altcoin market has this problem, and the problem is massive. It's a structural problem that won't change anytime soon. Have a look at the value of the token unlocks of the newly hitting tokens that come to the market every single week. It tends to be at around 1 billion per week. $1 billion of tokens need to be purchased every single week just for the altcoin prices to stay flat. Now, the counter argument is that all cryptocurrencies are inflationary to a degree. Even Bitcoin is. But compare this with Bitcoin. Bitcoin's inflation rate is at 0.83%. And that is per year. The market cap of Bitcoin is 2.34 trillion. So when we multiply the numbers, we've got potential sell pressure of 373 million per week. Roughly 1/3 of what the altcoins need to be bought at. So Bitcoin has less selling pressure, and at the same time we've got all of the supply absorption by the ETFs and by the Bitcoin treasury companies. And so when there's an asset that's less inflationary, that has less sell pressure, and at the same time has more buying pressure due to Wall Street, then of course that asset has to outperform. And historically we have exactly seen that. Since beginning of 2022 to today, the Bitcoin market cap relative to the others market cap, so the market cap of the smaller altcoins, has gone up by 291%. But this is actually underrepresenting the problem, because this is again just comparing market caps. But the prices tend to go down for the altcoins much faster because of the token dilution. So let's say we've got an altcoin of $1 billion of market cap. Now we double the amount of tokens, and thus the token price gets cut in half the market cap would still be the same, right? The token price went down by 50%, the market cap is unchanged. So the underperformance that we get from the token dilution isn't even presented here in this chart. This chart just shows how long-term people are exiting the altcoin market in favor of, in this case, Bitcoin. But the chart relative to Ethereum and relative to Solana looks pretty much the same. Here's another example to show the difference between price and market cap. This here's WorldCoin. WorldCoin supply went from 522 million to currently 3.8 billion. So roughly a 7x in the supply in the span of just 2 years. The WorldCoin price is close to all-time lows. The WorldCoin market cap is quite close to all-time highs. It's not that close to the low. Again, the market cap can be rather stable while the price is crashing. Again, the market cap can be rather stable while the price is crashing. So really, you're getting the return of the price, not of the market cap. And that's why most retail investors lose over time. Have a look at Bitcoin relative to WorldCoin. It's just going up. Or have a look at Bitcoin relative to Ape. It's also just going up. And this is, I believe, the key to making money in crypto. It's to take advantage of that inefficiency. It's to make money with all of that marketing dollars that are spent by the team, by the early investors, to attract other retail investors to buy things like ApeCoin or WorldCoin. So then a lot of liquidity is in the token that then the insiders can dump on that liquidity. But we can make money from that dumping simply by betting on falling prices of ApeCoin or of WorldCoin, at the same time betting on rising prices of Bitcoin, Ethereum and Solana. So we're playing exactly the delta of those two assets. That's why we get this long-term appreciating trend. I just took those two examples over here, but again, this is a structural problem with the altcoins. The selling is much, much higher than the market can digest. It's even higher than what we have for Bitcoin, as we've already discussed. I'm making money with those relative valuation bets already for more than 4 years. And had I just dollar cost average into Bitcoin, I of course still would have made a lot of money, but because of the relative valuation bets, I didn't just get the return that's indicated here by the gray line, I got the return that's indicated by the black line. So this is something I'm doing already for a long time, quite successfully, quite consistently. And recently, I even started a capital pool for the premium members where I execute exactly that strategy. And so far, after 1 month of trading, this is already bringing us annualized 74%, very consistently with a maximum drawdown so far of 2.6%. So really, I don't think that the edge in the crypto market is to find the next 5 or 10x altcoin. I think the edge in the market is to simply continuously, quickly grow the capital with little volatility, but to use the market structure to our advantage. With a random MemeCoin gamble, we can only invest a few hundred, maybe a few $1,000s. But when we actually have consistent growth with not that much volatility, suddenly we can invest much more capital, right? Investing a lot of capital into Bitcoin feels much better than investing a lot of capital in a small meme coin, right? We can deploy more capital. Thus, even if we don't have 10x returns in the span of a few days, it doesn't matter. If we've got above average returns consistently, if we've got a high Sharpe ratio, we are okay. Now, unfortunately, due to extreme demand, I had to close deposits for the copy trading pool. There will be a new capital trading pool starting at the beginning of next year, but right now I simply trade with the capital that I got from the members. But you can still manually copy trade me. For example here, right? This was the WorldCoin short. I bet on falling prices of WorldCoin and on rising prices of Ethereum. That was on July 23rd. And so many premium members simply copy trade me, right? There is quite a lot of gains to be made in those individual transactions. But it's not about the individual transactions, right? It's about the long term. It seems like quite complex, right? We go long one thing, we go short the other thing. It also sounds quite risky. But really, in the end, if we set this up properly, it's not that risky and it's also not that complicated. There's really only 2 videos to watch. It's this one, using perpetual futures on Hyperliquid, and here this one, probably even more important, risk management with relative valuation bets. It's only 1 hour of content. after this 1 hour, you know exactly what to do in order to get performances like this. And you will also know what to do in order to just copy trade whatever I do, so that you get the same kind of returns that I do. So really, just watch this video and watch this video and you're good to go. I'm not going to read it out in this video, but feel free to stop the video and read the feedback that I get. It's always nice to get this kind of feedback. If for whatever reason you do not like premium, then just message me within the first 7 days of signing up and I refund you the fee. It's currently $125 per month. If you don't like it, you'll just get that money back. Just message me. A link to premium directly pops up over here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.